So like has been mentioned, my name is Winnie. I'm also a manager in tax, and I'm going to be taking you through the various issues that taxpayers go through, and especially when we are engaging KRA. So I'm going to cover these in two focus areas: KRA audit triggers and handling and how to handle KRA when it comes to their audits that they conduct on our books. So I'll go straight to the KRA audit triggers. Now, as we have seen on papers and very many publications recently, KRA is very much present, and you can see they're very active in ensuring that they're able to capture and gather as much taxes that they can to meet the targets that they have. So one of the very common or maybe updates that we've seen in the papers recently is one we can see KRA puts tax evaders on notice. So there's been a lot of incidents where very many taxpayers are not declaring taxes as is required. So KRA is on the lookout, and this is being done through the many audits that they are going to be doing, and also revamping some of the audit functions and bringing or expanding their tax bases through some of the taxes which you've seen which have been introduced. So anyone who is not declaring their taxes, we can only say that your time is limited and KRA is actually coming to get you. Other tax updates that we can see, KRA is hiring over 2,000 officers in fighting against tax cheats. So like I mentioned, there are a lot of incidences of non-compliance. And so as to reduce this, KRA has actually revamped their team. They're hiring a lot of officers to assist in audits and verifications and to ensure that all taxpayers are actually compliant. And you can see there are so many audits which can either be through desk audits. Desk audits, we mean audits through the various return verifications through the ITAX. So with ITAX, with the introduction of ITAX and all the returns are actually filed, they're able to do through desk audits and contact the taxpayers so that they can be compliant where there are incidents of variances in the declarations. Other headlines that we've seen is KRA citizen tips in some 894 billion shillings tax drive. This is basically on whistleblowing. We have seen recently, KRA has actually rolled out has rolled out a system which is basically an anonymous reporting system where taxpayers or individuals are actually given a chance to whistleblow or to report any incidents of cheating or probably taxpayers who are evading taxes. So the process is very anonymous, unlike before where individuals would be required to actually present themselves at KRA and report any incidents of tax evasion. So with this in mind, an individual is required to go through an online platform to go and report such incidents. So it's very anonymous, and they've assured that individuals that they are actually very much protected. Another very good headline is where we saw just recently in the last month that KRA has actually surpassed their collection target by close to 6.6 billion shillings. So that tells you KRA is outside there to collect taxes. So if you're not really, to collect taxes and meet their target. So it's about time as you as a taxpayer that, even if you've not been remitting your taxes, just give to Caesar what belongs to him, because eventually they'll still be able to catch up with you. So through the KRA audit triggers, so I'm going to give a general overview on what audit triggers are, and then with time I'm going to break it down to the different tax heads that we have. Some of the general audit triggers we have is one, multinational organization. It is very obvious through the intercompany transactions, and in Kenya recently we've seen a lot of MNCs setting base in Kenya. So with the intercompany transactions and the companies which are actually coming up and setting up in Kenya, this may be an audit trigger, and definitely to ensure that these companies are complying in terms of the intercompany transactions. Related company audits. So in the same way, even in Kenya, we have companies who have other sister companies. So if one company is audited, then definitely there's a likelihood of the sister company being audited. So it is always necessary that if you look at how KRA has approached one company, then ensure your sister company is also in correct books, because it is obvious through the intercompany transactions and the related party transactions which are there, then the other company will probably be audited. Another very unique audit trigger is usually through the staff. So we always talk about having employees you trust, but in the same regard, it's good that you ensure that you have employees and treat them well, because if you do not treat your employees well, they can turn against you. I talked about whistleblowing. So if you're not really treating your employees in the best of ways, then these particular employees can actually go ahead and report your incidents of non-compliance to KRA. So, and some of these employees are actually employees who hold functions like accounting and finance section. So these are people, we are not saying you should not trust them, but definitely they are people you should actually ensure that you're working in consensus with and ensuring that you're able to comply and treated them in the best of ways. There are incidents where you have to part ways with an employee, but definitely there's a better way to do that, because like I said, with whistleblowing, they can go back and get back at you. Another audit trigger is non-filing of tax returns. So you realize there's a lot of incidents with the requirement, for example, by the banks to actually have a PIN when opening a bank account. We've seen situations where people open bank account and definitely you have to get a PIN, but you're not compliant with KRA. With the same regard, you still continue with your normal operations of businesses outside there. So again, with the non-filing of tax returns, and even with the existence of PINs, this is an audit trigger. These may make KRA to actually contact you and want to look at your information. Third-party information is another trigger, which is through exchange of information and through iTax. iTax, as much as we say, is a very good platform that came to ensure efficiency. It is good platform, but also from the KRA side, again, KRA is using third-party information to identify incidents of non-compliance. For example, withholding tax and withholding VAT. So you may decide to withhold tax on a particular supplier, for example, but that supplier does not declare the income. So KRA will go look at the certificates, and they're going to identify this particular supplier and notice that that particular income was not declared on the other side. So that's how that party information works. Again, also through the banks and the rest of the transactions. So I'm going to break down the audit triggers to the different tax heads. We have corporation tax triggers, failure to separate source of income. Like what the law provides is that you should be able to separate sources of income and tax them separately. So if you have business income, you have interest income, for example, you also have rental income, you're supposed to separate source the particular income, because there are incidents where you have business income, which is in a loss position, but you do have rent and interest, which basically is rental income, which are still in profit. So if you have losses on the business side, then that loss should remain as such, should not be offset against the profits on this other side. So many taxpayers, because of lack of knowledge, they tend to offset the business loss against the profits in this other form of income. So that is wrong. It's always necessary that to ensure that you separate the same. Reporting of perpetual losses. Again, we are not trying to say that there's a problem with this, but definitely, I know in Kenya, the law is to transfer losses for a period of 10 years. But again, looking at some of the losses that are there can be well attributable to the nature of business. If you have heavy investment at the start of the business, then this is likely to continue. But for some of them, you realize the nature of the business is one that is likely to be generating profit, but still you're just continually reporting losses. KRA will definitely have an issue. And we've actually seen a year, if I'm not wrong, mistaken, last year, they sent a lot of letters to everyone who was reporting continuous losses without actually being able to support. And, looking at the nature of business, is a person who is supposed to be making profit. There's no profit. There's no problem if you can support your losses, but definitely that is a trigger if you're actually reporting continuous losses. Variances in income, that is VAT returns and financial statements. This is another very obvious check that KRA does. As long as you're registered for VAT and you file your VAT returns every month, it is always necessary that you ensure that your ledgers or your books match with the declarations you're giving KRA. Because if you give KRA declarations which do not match with the books, there'll always be a difference. And I'll give an example where VAT returns could be higher. Your income as per VAT returns could be higher than what you've reported in the financial statements. Then that means you've underdeclared your income for corporation tax purposes, and definitely KRA will come for the 30% and vice versa. So it's always good that you check this. We advise a month-to-month kind of a reconciliation so that by the time your auditor is coming at the end of the year, these kind of reconciliations are done and you're good to go. So expenses without matching income, again, we've seen in line with losses, we've seen individuals who do not report any income at all, but still want to claim expenses. If you're going to claim any expenses, then there needs to be a corresponding income, because every income must have a corresponding expense. So if you do not respond you do not, recognize any income, but you do have heavy expenses, then this is also a trigger, and KRA may come to verify what is your nature of business. Another trigger is profit margin versus industry average. We've seen a lot of situations with our experience as Grant Thornton where KRA is doing a lot of industry audits. The most recent one we had is the tourism sector, and we could see different types of individuals. Some of them are reporting income and some are not. Well, even it is expected with them to do so. So again, always ensure as you do your books, there's some of the margins that you're able to check, because this is also a trigger that KRA also looked at. Unexpected loss in the returns, these I talked about in line with the perpetual losses. Winding up, if you choose to close the company and you have to cancel your PIN with the KRA will always do an audit on you. This is not to discourage you to just leave the PIN hanging. Definitely, if you leave a PIN hanging, you'll always have the liability of filing returns, and we know filing returns comes with a penalty. So you just, if you've stopped operations, it's always good to go through KRA. However, even when we go through the KRA to stop this process, an audit must be done, because KRA wants to be sure if we are cancelling your PIN, then are you compliant, or were you compliant in terms of your taxes for the time that you're operating. So before you get to that step of engaging KRA to wind up, it's good that you ensure your books are clean, and if you realize any incident of undisclosed liabilities, then at that moment you can do a voluntary disclosure. Publicity is another corporate audit, corporation tax audit trigger. Well, as much as we say advertising is good for the business, we saw incidents where KRA could actually spot a lot of advertising. And you see right now, advertising is very rampant in Kenya through social media, through the billboards. Every road you go to, you can see a billboard for a certain business. Publicity is good, but we've seen situations where KRA is able to pick a client or a taxpayer for audit purposes through such advertisements. So yes, it's good. You may decide to go big on advertising, but also ensure on the flip side, you're also complying. I'll go direct to the PAYE audit triggers. Just like VAT, for pay as you earn, you need to ensure that your salary matches your payee returns. Payee returns are filed every month. So you need to ensure that the pay as you earn you're paying on the salaries that you declare is the same as what is the same with the salary figure that you claim in the audited accounts. Because salary, being an expense, when you're doing your audited books, we've seen situations where people try to inflate the salary figures in the books, in the financial statements and ledgers. But when you go to pay as you earn, the returns filed monthly, the payee is very low. So there is inconsistency. That inconsistency, KRA will always have a trigger and will contact you for an audit. And then PAYE not paid in time, which also goes in line with the next slide, which is fluctuation in pay as you earn. So definitely you might think you're filing returns, but there's no one at KRA who is actually looking at what is happening. But believe it or not, someone is always monitoring. And one of the most unique things that we've seen KRA do is monitor the fluctuations in pay as you earn. Because if in 1 month you're paying 100,000, let's say 100,000 pay as you earn, then the next month you go down to 20, then the next month it goes up again or goes down. Those fluctuations, KRA will want to understand, what business are you running? Are you always bringing employees and getting rid of them? Are you even declaring the correct PAYE? So that is another pay as you earn trigger. And then also directors' fees vis-a-vis standard of living. They also do some, audits on the director. One thing you also need to understand, if KRA does an audit on a company, they must extend this on the directors. This we have seen. So as a director of the company, always ensure that you as a director, you have also proper books and your income also is well reported. Because we do have companies who pay directors some money. We also have incidents of directors drawing money from the company. If a director definitely draws money from the company, either accountant or an accountant, then there's a tax implication, pay as you earn or otherwise. So, like I mentioned, directors also need to be very cautious of these, to always ensure that they're running the companies independently. So VAT audit triggers, again, the variances in the VAT returns and accounts must match, and then consistent refund position. Just like losses, if you're in a consistent credit position, and this maybe is not in line with the business, with the nature of business, KRA will always have an issue. And we saw a year where KRA sent so many letters VAT, questioning the credibility of some of these VAT credits. So always ensure, one, for VAT purposes, you have the correct allocation or in terms of the rate of taxes, so that you ensure that you're carrying for the correct credit. Third-party information, again, like I mentioned, through withholding VAT and ITAX, sales inconsistencies. These we've seen through the VAs. If you're in business and you've been filing your VAT returns, I'm sure you've received the inconsistencies in the VA. So this is something that KRA was very, very good at, and were able to nab quite a number of taxpayers who were not declaring income. Again, VAT refund claims. In Kenya, you can only claim refund on 3 situations, either because you're dealing with zero-rated sales, you have paid tax in error, and maybe VAT on bad debts. So again, we always say, if you're going to claim a refund, ensure your books are correct. You cannot go to claim a refund and when on the other side you have a lot of undisclosed tax liabilities. Your refund will definitely cover all that, and maybe KRA can get more. So before you claim a refund, ensure that your books are actually correct. And also, another VAT trigger is the fact that some people are very inconsistent when it comes to filing returns, such that they always file their returns late. So I'll move to how to manage KRA audits. What do you do when KRA catches up with you and then they have given you an audit letter? What is the process? What happens? Now, I'll cover this in 3 sections. Before you receive, definitely immediately you receive a letter, that is before starting an audit, during the audit, and after the audit. How do you handle this process? Now, before the audit, immediately you receive an audit letter. Do not rush to, in panic to KRA or want to provide the information as stated in the letter. It's always necessary to read the letter if they've given you a letter. And the first thing you need to do is always involve a tax consultant who is going to analyze your systems. Okay. The next step is to obtain an official a letter from KRA with the required information. We've seen instances where someone just tells you, send me information. Before you even disclose any information, and the law is clear, before an audit is done, this has to be officially communicated. So ensure you have a letter of audit. So involve a tax consultant, because we've seen people who rush to KRA, but you end up reporting yourself. So it's like taking yourself to the police and exposing yourself at that moment. So if you do not know how to react, just involve a tax consultant. We always have, with the experience that we have, we can assist you on how to handle the process. So ensure you have all the relevant information, because definitely in the audit letter, KRA will have listed the items that they may need. Ensure you have all that information in place, and then agree with KRA on a time frame. Do not act immediately like they say. I know they say, well, you have to act because they'll tell you, give us this information within 7 days. As a taxpayer, you still have the right to request for extension of time. You do not have to act within the 7 days. This could have just caught you. You just received a letter from KRA. You do not know what to do. You're confused. And the first thing you need to do, agree with timeline in KRA. Tell them, give me an extension of time to provide this information. And from experience, we've not had a situation where KRA has rejected a request for extension of time. And then definitely inform the staff to avoid any surprises. This is basically the staff involved, or the staff who are going to be basically assisting in the audit. This is basically the finance and accounting function. What do you do during the audit? Before every audit is conducted, there's usually an opening meeting. We've seen, and from experience, we've seen situations where our clients have gone directly to KRA without without a tax consultant, and that opening meeting becomes a problem. So just within that opening meeting, you've already exposed yourself a lot. So do not attend any meeting without a tax advisor or a tax consultant. We always say you may decide to give a lot of information, but one information leads to another. So the best thing is involve your tax consultant. They know what information to give at what level. So do not go alone. Again, like I said, from experience, we've seen a lot of taxpayers who've actually exposed themselves even during the first day, and KRA will always carry on that as they move on the audit. Okay, the other option is ensure that you appoint one contact person to avoid many people who are dealing with KRA. So if this audit is going to be carried at your premises, ensure that you have a contact person, not anyone. in the office, because we've seen situations where, again, one person may expose the company. For example, if you're dealing in a manufacturing company and an auditor or KRA auditor has come to audit, investment allowance, and you know very, very well you made a mistake and you claim investment allowance then when it was 100% in a year which you are not supposed to claim. And then you let this particular KRA auditor go and do the field verification at the factory. And there they go and find a manager in charge of the machines. So the engineers' machine levels, they know about the operations of the machine, but they do not know about the implication of claiming an allowance at a particular time. So you go and ask them, then when was this machine installed? When did it start? And that particular engineer will actually tell them, we just started now. And probably you're in 2020 and the ID was claimed in 2019. KRA will automatically want to disallow. So it's always good, appoint that person who understands the tax perspective of it, and who is able to give information, but only relevant information, not just anyone. So be cooperative. Again, do not be a person who listens to KRA and cooperate with them, because definitely leniency is a case for prosecution. And be a person who is able to listen to KRA, and then avoid questions which are going to put you on the spot. After the audit, what is the process? What should you do after the audit? So after the audit has been concluded and they've given you the findings, sorry about that, they've given you the findings and now you have to pay the tax. Always ensure KRA gives you an official letter which is confirming the final position. Do not just let it go. How you decide to end the audit, if there is any tax payable, ensure that the tax is paid, and also ensure KRA issues you with a letter confirming the position agreed upon. So we've seen situations where an audit is concluded, whatever tax is agreed upon is paid, but there is no letter showing conclusion of an audit. That is very dangerous, because that would still keep it open for another auditor, for another KRA person to come and audit the same thing. Well, if you have a letter and someone comes and wants to audit the same period, you can show them and tell them, look, I was audited and these are the findings, and even these are the taxes that they paid. So you can object to any taxes which you are in dispute. If you have any taxes, then KRA has issued you with a demand or an assessment, object to taxes which you not agreed to. Again, at this level, involve a tax consultant, because there are so many, there are stipulated timelines that taxpayers are not aware of as per the law, which involve objecting to taxes which are in dispute and going forward the appeal process. So please, this is a situation, this is a scenario we've seen with a lot of taxpayers. They fail to involve a tax consultant who is going to advise them, and failure to observe some of these timelines, which also includes paying the taxes which are required. What does it mean to lodge a valid objection? If this is done, then it puts the taxpayer at a very bad situation, which they may end up losing the case. So it's good to involve a tax consultant who is going to assist you with that. Apply for waiver of penalties. Like I said, if you have been audited and there's an assessed tax, definitely there are penalties and interest which are going to be imposed. As a taxpayer, you have the right to apply for waiver of the penalties and interest. At KRA, the commissioner will have the right to actually give you this waiver, either 100% or an agreed upon rate.